Imagine you are diligently saving for retirement, making regular contributions to your individual retirement arrangement. This is fantastic, but what happens if, with the best of intentions, you accidentally put in more money than the rules allow? It is a common concern for many savers. If you overcontribute to an individual retirement arrangement, commonly known as an IRA, you generally face a 6% excise tax on the excess amount for every year it remains in your account. The Internal Revenue Service sets strict limits on how much you can contribute annually, and exceeding these limits triggers financial penalties. These contribution limits are in place because IRA accounts offer significant tax advantages, such as tax-deferred growth in traditional IRAs or tax-free withdrawals in retirement for Roth IRAs. To prevent individuals from using these benefits excessively, the government establishes annual caps. When you exceed that cap, you are essentially trying to receive tax benefits on money that is not eligible, which the IRS corrects through the excise tax. Fortunately, there are clear steps you can take to correct an overcontribution. The best approach is to withdraw the excess contribution along with any earnings attributable to it before the tax filing deadline, including extensions, for the year the overcontribution occurred. If you do this, the IRS typically waives the 6% penalty. If the deadline passes, you will need to pay the 6% penalty for each year the excess remains, and the only way to avoid future penalties is to withdraw the excess or apply it to a future year's contribution. When withdrawing earnings related to an excess Roth IRA contribution, you will need to be aware of the pro rata rule. This means that if you only withdraw a portion of your Roth IRA, the earnings are considered to be withdrawn proportionally. There is also a specific calculation for determining the net income attributable to the excess contribution, ensuring only gains directly from the overcontributed amount are subject to withdrawal. You might need to file Form 5329 or additional taxes on qualified plans to report and pay the excise tax if you do not correct it on time. Understanding these rules empowers you to manage your retirement savings effectively and avoid unnecessary penalties. By carefully tracking your contributions and knowing the correction methods, you can ensure your hard-earned money grows as intended, securing your financial future without any unintended surprises.